Hello, everyone, and welcome to the Tuesday live stream. If you guys don't know me, I am Jessie Lang, and I help people buy 1 to 3 rental properties per month on autopilot. Now, today we have a topic that is a little bit different than true real estate related, but it is entrepreneurship related. And if you plan to go into this industry, either part-time or full-time, if you really kind of want to jump in head first, you are going to need to understand healthcare for entrepreneurs. So we have with us Mike Gatteri, who is going to, he's actually our health insurance provider and has been for what, like 4 or 5 years now?
About 5 years, yep.
Yeah, 4 or 5 years now. He has been on the live stream before, and you're like, Jessie, why are you bringing him back in? And there's a good reason. So number one, lots of things change. And so we are going to talk about some of those changes that are happening in our government right now. And then the other reason is that, just there's new audiences here and your situation may have changed, right? You didn't need him last year and now we're here. It's also open enrollment. So it is the perfect time to be talking about these things. So Mike, let me turn it over to you for an introduction, who you are, what you do, all that good business. And then let's start talking about what the plan options are out there.
Sure. Yeah. So thanks so much for having me on. Love sharing this information, even though it's sometimes not good news, right? It's never interesting and fun news because it's health insurance, but nonetheless, we know it's something that we have to have. But for those who I have not met before, my name is Mike Gatteri. I am a health and life insurance agent through a company called Health Markets, and we work with 250 different insurance companies. We work nationwide. I personally am licensed in 38 states. But I have friends and colleagues in the other 12 that would be able to help you if I'm not licensed there. And so we work with not only the marketplace plans through the ACA or the Obamacare, whatever you want to call it, but we also work with all of the other alternative plans that are out there. And so I think that's a perfect place to start. What are the options? What can you do? And is it as doom and gloom as what you hear and read out there in the news? So there's really 3 different ways you can buy a plan out there in the open market today. Option number 1 is the marketplace. The marketplace is best for you if you have low income. So if you qualify for government subsidies, you want a marketplace plan because it is the only place that you can qualify for government subsidies. But you also want a marketplace plan if you have pre-existing conditions, if you want to get pregnant, or if you need mental health coverage. Because the marketplace will cover everything pre-existing. It'll cover maternity. It'll cover mental health day one. Our other alternatives are best for you if you don't qualify for government subsidies. So if your business is doing well and your income is above the threshold, you probably don't want a marketplace plan. But you also wouldn't want a marketplace plan if you don't have pre-existing conditions, you don't need maternity, or you don't need mental health coverage. And so the reason I say that is because these other options out there, they are going to be significantly less than a fully priced marketplace plan. And the reason that they are less expensive is because they don't cover pre-existing conditions, they don't cover maternity, and they don't cover mental health. So if those 3 things aren't important to you and your income is high enough, look at the other alternatives.
Yeah, why pay for something you don't need?
Exactly. This year is going to be an even bigger reason to dig into those options.
Cool. And then I know that there's a third option that I think is less familiar or less common.
Yeah, so you can get what's called a faith-based share plan. So if you've ever heard of Christian healthcare ministries or MediShare, that's what we're talking about here. Less than 1% of the nation has these plans. And these technically aren't even insurance. It's you and about 150,000 Christians who all put your money into a collective pool. If there's money in that pool, they can pay for your claims. But if there's not money in the pool, they can't pay for your claims. And they tell you right up front, we don't promise that we're going to have money when it comes time to share in your claim.
That is an interesting concept. And
certainly not for everybody.
Yeah, being 1% of the population. Yeah, it makes sense that either people are on the marketplace or what's it called if you're off the marketplace?
The off marketplace plans are called limited benefit plans. So there's 3 types of limited benefit plans. You can get a short-term plan, you can get an indemnity plan, or what's called a specified disease plan. We'll drill into those a little bit more here in a minute.
Okay, cool. And I know that everyone's probably thinking, we've heard the horror stories about just the cost of health insurance today. And I'm here to tell y'all that with some of these off-market plans, it does not have to be nearly as scary as you think it is. So, Mike, can you give us maybe an example of, a family of 4 2 kids, mom and dad, what would it be on and off market?
Yeah, so assuming that family's not getting any government subsidies, family of 4, assuming mom and dad are, say, late 30s, early 40s, that plan will probably be somewhere between $1,200 to $1,600 a month if they're not getting government subsidies.
Okay.
Now, subsidy threshold for a family of 4, at least in 2025 standards, subsidy threshold could be as much as $160,000 a year. So if that family's making under 160, the government's going to kick in and pay a portion of that premium. And so we might have a situation where that same family of 4 who's making 50, 60 grand gets free health insurance through the marketplace. So it could be subsidized by $1,600 a month because of income. So that's where the income number plays such a huge factor. So for all the investors on here, when we're talking adjusted gross income, you get to take out your business expenses. You get to take out all of your mileage. You get to take out all of your deductions, and that's the number they're going on. If we can keep that number low enough, the marketplace is a good option for you. Now, if you want to go off the Obamacare situation, that same family of 4 might be looking $500, $600, $700 a month for a short-term plan, for an indemnity plan, et cetera.
So that's less than half.
Yeah.
Less than half. And again, you're giving up 3 kind of big categories, but if you don't need those, why are we paying for them?
Exactly. Yep. If you're a healthy individual, you don't have major pre-existing conditions, you're not looking to grow your family, you're not going for mental health coverage, you can absolutely save yourself a ton by going with one of these off exchange plans.
I love it. And so Mike and I, before this call, I was like, hey, remind me, like, how much do I pay? Because I have forgotten, which is, I recognize as a blessing. So we looked it up, and I paid $218 a month for myself and my wife for an off-market plan, which would be how much on market, you said?
Probably $750 to $800.
Yeah. So that's a quarter of the price because we're not looking for those 3 topics. And so this is why having someone like Mike in your back pocket is going to be so important, because a lot of on the news, they don't tell you all these options. You have to have someone who's the expert, right? They just want you to go into one plan and one plan only. And there's so many different ways that you can achieve, similar. So outside of the 3, as far as like deductibles, like what would kind of be the difference between marketplace and otherwise?
So the biggest difference you're going to find are networks. So with all the marketplace plans, in the majority of states, so there's a state here, a state there where this isn't necessarily true, but in the majority of states, all marketplace plans are HMOs. And so they're going to tell you what doctors and hospitals you can and cannot see. As to where almost every off marketplace plan is going to be a PPO. So you get to pick your doctors and hospitals. And so this is the example I use. I'm in Central Ohio, so I always use this example. If I get diagnosed with cancer, I want access to the Cleveland Clinic. There is no marketplace plan in Central Ohio that gives someone access to the Cleveland Clinic because they're all HMOs. But with every off-market plan, despite the fact that it's a quarter of the cost, you still have access to the Cleveland Clinic should that oh shit moment happen to you.
Yeah. And I mean, I don't want to scare anyone, but this is the real world. It's not a matter of like if something's going to happen to you or your family, it's when. And I promise I'm not trying to scare you, but that is like how I make my decisions. It's like you got to plan for it. So.
Well, and that's the whole point of insurance, is to plan for that worst case scenario. And if you firmly think that the worst case scenario is never going to happen, by all means, don't buy insurance. But if you want to protect yourself, think through what that worst case scenario might be. And for me personally, if that worst case scenario happens, I want access to the Cleveland Clinic, the Mayo Clinic, MD Anderson, Sloan Kettering, the elite facilities across the country.
I just am imagining being a person, like living in that brain of someone who doesn't worry about worst case scenario. Like, could you even imagine that life? It sounds so good.
Yeah, it'd be fantastic.
Yeah, it seems so well. I'm always planning for worst case scenario.
Exactly. Unfortunately.
I love it. Okay, so I have a question. Can your business as an entrepreneur pay your healthcare premium?
Absolutely. So I'm not an accountant, so I can't really get into the details of how, but absolutely it can. And there's going to be differences, right? So an LLC is going to write it off different than a sole proprietor, than an S Corp, than a C Corp. But in every situation, whether you have an individual plan or whether you have a true group plan, it can be written off by the company. You may have to jump through a couple legal hoops. So I set up what was referred to as an ICHRA. Basically means I, as the personal employee of the company, go out and pay for the plan, and then my business reimburses me. But depending upon how your business is set up, your accountant will tell you how to write it off, but you can always write it off.
Okay. You guys hear that? Entrepreneurs out there, you hear that? It's a business write-off. I'll tell you, my business does definitely pay my health insurance.
For sure.
Yeah, love it. Where would like an HSA type plan fit? Does it fit into any of these in any way?
I love the HSA conversation. And for the new year, for 2026, that's one of the big changes. So every single bronze plan through the marketplace will now be HSA eligible. As long as you have what's called a high deductible health plan, you can get an HSA. And the beautiful thing about an HSA, it is the only place in the world that I know of that you can get a triple tax deduction. So you're able to deduct it on the contribution. So the money you put into your HSA comes off of your taxable income. The growth of that HSA is also tax-free. And then you can pull it out tax-free as long as you have credible documentation for that. And so what I do in my situation is I save all of my medical receipts and I'm just keeping them in a folder until I turn age 65. And then I'm able to allow that money to compound and grow interest every year between now and age 65. And I'm able to pull it all out at age 65 tax-free.
And at that point, it's basically you had free healthcare this whole time, right? Because the money is growing.
Exactly.
Yeah. Very cool.
I put in about $8,000 a year into my HSA, and I'm getting on average between a 5 to 7% interest rate on that every single year. So imagine the compounding that's happening there.
Yeah. And I say this all the time, but I bring you guys experts who are going to teach you how the rich get richer. And this is like one of the key, compound interest in any, and it's smart vehicles like an HSA.
So, but to build on that topic there, I had a hip replacement this year and I owe $6,000 to the hospital. And when I pay that $6,000, I'm paying it out of my personal savings account, my personal checking account, so that the money that grows tax-free stays in that account. So don't put into it and then pull it right back out. If you can afford to use other funds, that money will continue to grow in the background.
Yep. I have heard to never use your HSA. It's basically a savings account at this point, an investment account.
100%.
Yeah. Interesting. Okay. Well, Mike, you asked me to ask you about some upcoming changes because I know you have a lot to say on the topic. So how has this past year administration and just policies kind of affected what's happening in insurance?
Yeah, so up until about 2-3 weeks ago, there wasn't a whole lot of news to share, but I got to be blunt, it's going to be ugly for 2026. So using Central Ohio as an example, the average rate increase out there is about 22%. And that's before subsidies change. So if we have that subsidy eligible individual, they're going to feel even more pain. Because what's happening is the subsidy threshold was at 600% of the federal poverty level for the last 5 years. Okay. And unless the government extends it, it's set to expire at the end of this year. The subsidy threshold will go down, which basically in a nutshell means that subsidies are going to decrease. So imagine a 22% increase in premiums, plus you're getting less government money. So for those who are on the marketplace getting government subsidies, it's going to be a painful year, which is even more reason to look at those other alternatives if the government doesn't re-extend the subsidies. And that's the main reason of the shutdown right now for the government is they can't decide on what they want those subsidies to be.
Yeah. Yeah. Is that same 22% on the off-market plans?
No. So those will be significantly less. We're seeing anywhere from 8 to 12% on the off-exchange plans.
Okay. Cool. And so, 22%, gosh, this maybe isn't insurance related, but how are people going to make up this cost? Like what's going to happen? Yeah.
So the harsh reality is that the phone call I had right before this lady's premium went from $990 a month to $1,250 a month. And she flat out said, I may have to go uninsured. And that's a sad state of affairs, but it's definitely the case. Other situations, you might have to give up your doctors because she was through the Ohio health system And if she went through the Mount Carmel system, it would be cheaper. And so that's an option, right, to find different doctors or hospitals. The other option is to maybe go to one of those limited benefit plans. So there are options out there. I don't like being the bearer of bad news, but this will be a year where you might have to make some concessions to get through to the next 12 months and hope that the plans will get better.
And so that was my next question is, say the government figures this out, what could you, and I know you don't have a crystal ball, but what could you predict would happen like 5 years?
So what I think will happen in the industry long term is I think we'll have Medicare for all. So Medicare is a stable market. Medicare has stable products. Medicare has stable rate increases, and it's run by the government partially. And so with Obamacare or the marketplace, whatever you want to call it, that has some government interaction. So I think over the long term, we'll wind up with Medicare for all. But we got to get all those congressmen and senators to, agree and shake hands and get along for that to happen.
Okay, well, when you can figure out how to make that happen, we're going to be very, very wealthy. And okay. Well, anything else that you want to add as far as, if someone wants to get in touch with you, because talk to me about open enrollment and how that process works.
Yeah. So November 1 through December 15. And I think the open enrollment will be extended longer than December 15 since the government has been shut down at the beginning of open enrollment. But as of now, November 1 through December 15 is your time to pick a new marketplace plan. For the non-market, the limited benefit plans, you can change those any time of year. But we always encourage everyone to have the decisions now. Because let's say you're on a limited benefit plan and you say, hey, my health is changing. I want to go back to a plan that covers pre-existing conditions. Well, you can only do that during open enrollment. So it's always a good idea to have those conversations in this 45-day window. The other things that are important to know, we don't charge for our services. So many people think they're going to have to cut me a check or they're going to owe me something at the end of the appointment. There is literally no fee for our consultation. So please get the free advice and, we'll help you shop for the plans. We'll compare the plans. We will make sure that you're in the best possible plan year over year over year so that you can do what you do best and not have to sit there and lose days and hours and weeks of just shopping health insurance.
Yep. And so we were just saying before this, we need to get back on the calendar. And this is something we do every year. We touch base. What's changed in your life? Medical is still all the same and finance is still the same. So we're due for our touch base. But outside of open enrollment, there are some other factors that could trigger someone being able to switch plans. What are those? It's like a job.
So big one to be loss of a job. So you might have someone who's watching this and they're a new investor, right? They only have a couple doors that they're operating and they decide they're going to buy a couple more properties and now leave their employer and do this full time. Losing employer coverage is a qualifying event. Moving across county lines is a qualifying event.
Oh,
marriage, divorce, birth of a child, anything that impacts your ability to get health insurance will be a life event to where you can enroll mid-year.
Okay, cool. So if none of those things have happened, this is your time frame. But if you're expecting, some big change, I didn't know the county lines one. That's interesting. So if you're expecting a big change, then you would have a little more flexibility on that.
Correct. Yeah.
Cool. Well, very cool. So what's the best way for people to get in touch with you?
Two different ways. First would be on the website, which is just healthmarketscolumbus.com. So that's health, HELTH, markets with an S on the end, Columbus.com, healthmarketscolumbus.com. Or, of course, you can call the office. I can tell you will get voicemail this time of year. We're getting a couple hundred calls per day. But the phone number is 614-568-1324. Again, 614-568-1324.
There we go. Got it up on the screen. So you guys give Mike and his team a call. They're fantastic. I can personally vouch. We've, thankfully never had a huge claim, but we have had some things. And, if you have any questions for them, they're very, very quick to answer. It's not just this time of year. They're going to support you in your health journey, as long as you need year round. So thank you so much for your time. Truly appreciate it. And thank you for the expertise. And I'm definitely scared about what's happening, but I think that in the long run, we'll all be just fine.
We'll navigate the waters for you. Appreciate the time. Thanks so much for having me on.
Thanks, Mike.
Bye-bye.